Hey, good morning. Let's go over today's trade plan. So in the overnight session, we were using 35 to 37 as support, and the idea was that as long as buyers can hold ES above that area, they can maintain control. And now heading into the open, we are going to be using 35 quarter to 37 quarter as the initial support zone. And again, as long as the market remains above that key support, buyers can remain in control, and we could be setting up for a upside move. What we do know is that the market has been stuck in a range for over a week now, and the markets are gearing up for a directional move outside of this range. There is a negative divergence between the S&P and TF, but the Russell TF is at an inflection point. So in the Russell, we're going to keep an eye on the 1166 to 1168 area. If TF can break out above it, or at least hold and then break out above it, we could get a upside break in NQ and ES. And if TF starts breaking below 66 and holding, then that would be a sign of weakness, and we could be setting up for a break below 35 quarter, 37 quarter in the S&P. But as long as ES holds above 35 quarter, 37 quarter, TF holds 66 to 68, and ideally NQ remains above the 4210 area, then everything would be lined up for a upside break. And on the upside, at this point in the S&P, we have the all-time high 43.75, pre-market resistance 40 quarter to 42 quarter. A breakout above that would set a new all-time high in the S&P, and of course, there is no hard resistance above 43.75. So at that point, we would really be looking at what type of volume we're seeing in the market, and if we're seeing below average volume, then we could get a 10 to 14 point range, and that could take the S&P up to 49 to 51, potentially a little bit higher. But any breakout on the upside, we are definitely not looking to fade. That is going to be a break above a multi-day balance, and at that point there would be directional conviction in the market. So in the event of an upside breakout, we want to look for pullbacks to get on board. And as long as there aren't any major warning signs, which would be a failed breakout scenario where the market tries breaking up then reverses immediately, or something along those lines, then we'll be careful. But aside from that, if we get an upside breakout, we don't want to fade it, and we want to buy pullbacks and target a move up to 49 to 51. On the downside, in the event of a break below 35 quarter, that would be a sign of weakness. Now we would still be within balance, so it wouldn't be a balance breakdown scenario, but a break and hold below 35 quarter would bring yesterday's low at 31 quarter and the bottom of the recent balance at 26 to 28 into play as downside targets. So if we break below initial support, then we have to be cautious on the long side, and as long as we're seeing weak internals and weak price action, downward momentum, we'll look for short setup, targeting a move down to 31 quarter, 26 to 28, and with potential to break lower, but if the volume remains light, then 26 to 28 could be it, and would be exhausting the range down there as well. So heading into the open, this 35 quarter, 37 quarter is really going to be key. By default, we're giving edge to the buyers as long as that support zone holds, and the primary scenario is going to be an upside break. But if we do break below the initial support, then we'll have to adjust, and in that case, the downward scenario could be in place. But 35 quarter, 37 quarter is going to be the key zone that helps us identify which side is in control. And in the other markets, again, Russell 66 to 68, key support in NQ, roughly the 4209 to 4211 area is important. And as long as the markets are holding above those zones, then the buyers are still in control, and we could be setting up for a upside breakout. So those are the main ideas heading into the open. Let's see how well the buy side holds it up, and we'll take it from there.